Did you know that the majority of today's billionaires make their fortunes in the same way? There's a good explanation for why this is the case. Because John D. Rockefeller once remarked that the ability to generate money is the most reliable thing in the world. This is the reason why. When presented in the correct manner, it cannot be changed. Imagine for a moment that you could make whatever amount of money that your heart desires. This misconception will be busted today, despite the fact that it could appear as though you can only hope to achieve that. Because if you look at how John D. Rockefeller made his $1 billion, you can learn some innovative money strategies that will help you become wealthy. Still do not trust it? Then you should watch the video all the way through to the conclusion and judge for yourself. Hello and welcome to our channel, Future with Finance. If being wealthy is one of your goals, you should consider subscribing to us for more contents like this right away. The first person to earn $1 billion was John Rockefeller. Rockefeller invested $2,000 as the beginning capital of his first company. He borrowed his father for the remaining $1,200, and when Rockefeller passed away in 1937, his fortune was valued at $1.4 billion. This would be $318 billion in the world as it is today. For comparison, the estimated net worth of the richest man in the world, Elon Musk, is only $219 billion. I came to the conclusion that John Rockefeller's final success can be attributed to a small number of financial skills after reading his biography in great detail. I will share with you the essence of these skills as you give this video a thumbs up. Secret number 1. Keeping track of your money. At the age of 7, Rockefeller worked on a neighbor's farm, helping to gather potatoes and breed rabbits. Then, on the advice of his mother, he made his first entry in the ledger, calculating every penny as instructed, how much money he received, for what, and how did he spend it. These are the analogs of the modern cash flow statement, one of the tools used to monitor the financial health of the company. John lived for 97 years and was held till his death. Rockefeller's biographers frequently note that he was raised in a family with little resources. There was no information on his father's income. What is certain is that future millionaire David Rockefeller's father was a traveling salesman who traveled extensively around the nation. Rockefeller's mother had to save money while her husband was away from the house. As a result, she developed the habit of counting every dollar, which she then passed on to her kids. John has known since he was young how tracking money increases its value. His parents intended him to go to a university, but John Rockefeller opted for an accounting program at a commercial institution. And after he graduated from college and began working as an assistant accountant, his supervisors immediately recognized and valued his love of numbers. Rockefeller's eyes would always light up when he was given such assignments, because none of his co-workers liked to mess with finished periods and projects. Rockefeller began working for $17 per month. Since the second month, it has been $25. And a year later, he was promoted to manager with an $800 annual salary. It is crucial to underline how dedicated John was to financial literacy, because it was his understanding of money that served as the cornerstone of his future prosperity. I consequently suggest that you focus on acquiring personal financial knowledge. If you're enjoying the video so far, feel free to hit that like button and subscribe if you haven't already. That will help the channel a lot. Secret number 2. Don't be afraid to borrow. Borrowed money is viewed by business owners as a bad thing that should be avoided. They do not have to, as demonstrated by Rockefeller's example. Rockefeller very certainly would have worked for hire his entire life if he had not borrowed the money from his father to start his own firm. Rockefeller's enterprise was always accompanied by borrowed money. Even when he had enough of his own money to buy all the shares, he preferred to sell them to the next investor. He kept some of his own money in reserve while also investing some of it. And even in the absence of investors, he would finance the following project fully on his own. Rockefeller started out with a modest logistics firm, Rockefeller took on orders totaling $500,000 in the first year. They soon ran out of money to survive. Already owing his father a large sum of money, he gave him a loan at a rate of 10% per year. Wherever he could, Rockefeller borrowed the funds that were missing. Though difficult, he was able to complete the task. It is considered that only those who lack financial literacy do not fear borrowing money. They differ from Rockefeller in that he made wise borrowing decisions. Secret number 3. Fulfill obligations. Rockefeller was extremely conscientious about meeting all of his commitments, especially the monetary obligations he had. Regardless of how challenging it was, especially in the early years of his business when he faced a lot of obstacles, he persisted. He was always able to locate the required sum by the appropriate day. Rockefeller recounts the story of his father coming to his office for another loan payment at the most inconvenient time and insisting that he required the money right now. In his biography titled, "How I Made $500 Million," Rockefeller himself has a tough time determining whether the events transpired as a result of random occurrences or whether his father purposely selected the dates in question for instructional purposes. In any case, he made sure that each creditor, including his own father, received the appropriate amount of money at the appropriate time. Over time, bankers began to believe Rockefeller when he said certain things, bringing forth the entirety of their saved items for his inspection. His reputation in the field of finance was the best guarantee he could offer. Therefore, you should not overlook the need of vigilantly monitoring both your credit history and your reputation in the financial world. Secret number 4. Each decision has its price. Due to the fact that he did not engage in random behavior, Rockefeller was able to borrow money without experiencing any anxiety and consistently met his obligations. Each choice was preceded by thorough consideration and analysis. When he borrowed money, he always considered when and how much he would have to pay back, and he did so with careful consideration. How much money he would make off of the loan, as well as how he planned to pay it back. If he were to invest his own money, he would first choose when and by what amount he would multiply it. Rockefeller poured millions of dollars into his various businesses and ventures. If the investment led to a rise in output or a decrease in expenses, both of which resulted in an increase in profits, then the investment was successful. Rockefeller did not skip. Rockefeller was the first person in the United States to switch from moving oil in wooden barrels on horseback to transporting oil in tanks via rail. Before this, oil was transported in wooden barrels on horseback, driving entire trains across the country. When he saw the damage that was being caused by repeated fires, he decided to stop trying to save money on the safety of refineries. The original American refineries were literally sheds. The oil industry executives believed that oil was a lucrative business, but they anticipated that it would soon be exhausted, and as a result, they did not see the value in investing in the infrastructure. When Rockefeller first started selling oil overseas, he needed machines that could quickly move the oil from tanks to tankers. Rockefeller financed the construction of the necessary railway stations out of his own personal funds. At first look, it appears that he simply handed them over to the railroad without charging them. Rockefeller was able to carry oil via rail at a cost that was 3 times lower than that of his competitors because of this, in addition to the volume of transportation, which formed the basis for decreasing the tariff. In addition, Rockefeller held a number of iron mines, after coming to the conclusion that it would be more lucrative to carry ore to blast furnaces and ports via ship as opposed to railways. He constructed his very own fleet from the ground up. Rockefeller's business partners did not want to invest in his discoveries because they were perceived as being too hazardous. In these kinds of circumstances, he would say something along the lines of, "Okay, I will invest the money alone, but all of the profits will be mine too." After hearing this, the partners would immediately become flexible. Everyone was aware that there would undoubtedly be a profit as a result of Rockefeller's willingness to invest the loan. Secret number 5. The concept of wealth. There are certain facts that can be found in the world of money that have been around for a long time and are certain to make a lot of people wealthy. That is precisely what the money skills that John Rockefeller possesses are about. The majority of you could be put off by their lack of depth and familiarity about financial education. However, those who were able to discover the courage within themselves and appropriately manage those circumstances will accomplish their individual financial goals in a short amount of time. It is the primary channel devoted to personal finance. Subscribe to us, and you could get wealthy by applying the strategies that we keep on sharing with you guys. That's all for this video. See you in the next one.